We're going to start with Nestle at the top. We're going to be quite quick about that one, though, because we have discussed it a lot. It's really the world's largest nutrition, wealth and wellness company. If you add it together, it's enormous. Headquartered, of course, in Vevey in Switzerland, founded by a French or German guy who was resident in Switzerland, and of course his name was Nestle, first name Henri. Market capitalization, if you look at the US ADR, it also has its principal listing in the Swiss market. But in dollars, we can use different currencies for this kind of thing, 262.2 billion. So it's almost in the first division. Price to earnings ratio fairly elevated at 29.79. Dividend yield 2.8%. Under new management, where the guy came in from outside the company, from a healthcare background.
Yes.
But just talk to us about the portfolio firstly, and secondly, whether or not one should feel positive about it. The share price has done well recently. While we're talking, the share chart will come up and it will reflect a nice bounce up to the sort of mid-80s.
So to give you an indication of the size of this company, last year alone they did $8 billion in water sales, just in their water brand. So it really, really is massive. You're looking at food and beverages and almost everything with a Ness embedded into the name. Nestle,
Nescafe, Nespresso, huge in coffee.
Correct. Big in coffee, big in confectionery. You've also got the baby side.
Is things like Kit Kat.
Kit Kat, Haagen-Dazs is part of their stable of brands. You've got all the baby care products and formulas and that type of thing. So really, really superior portfolio and products within there, no doubt.
In addition to that, they own around 23% of L'Oreal, which we'll talk about in a bit. So that gives them the whole kind of exposure to hair care and to those sorts of products. It's not clear, though, whether they're trying to increase that exposure or decrease it, because they did decrease it a little bit in 2014.
Yeah, correct. I think there's the opportunity at the moment with the founders of L'Oreal moving on for them to increase that stake. So that'll be interesting, because it will increase that pharma and beauty cosmetic side of things that they perhaps light on compared to the rest of these companies.
But hang on. Bottled water, you got to love. Fabulous margins and certainly very healthy for you. That's Perrier and some Pellegrini and Poland Spring. Coffee, I love, because that's got no health concerns and everybody's going crazy for coffee. The bits that worry me a little bit are the cereals division. So that's like Nesquik, Nest cereals, some of the sugar-based milk products like Nesquik, for example, and then all of the chocolates. I mean, in addition to Kit Kat, they've also got Smarties and Aero. So now
everyone loves an Aero.
But the point is, like, globally, I can see that could still be in an uptrend. But is there no little long-term concern for those things, those products?
Look, there might be, and that's why these health-conscious products need to have a place to almost offset those, those indulgences in the portfolio. But look, the way I'm reading management is they like what they're sitting with and they want to grow that organically. I don't think they're looking for too many
acquisitions. The problem in the past, though, has been that they haven't been able to achieve enough top-line growth. So globally, they're doing all right, but they're just kind of bumbling along. They've got a target of trying to grow by sort of 5-6%, but they always seem to be delivering either flat sales or 1-2-3%.
Couple percent usually.
Yeah, so that's the concern. Very competitive markets that they operate in. But does the new guy appear to be making changes and getting costs down internal? Because the share price reflects that it is.
Definitely. I mean, I think that's a great point you've raised, Paul, is that he's brought through a lot of efficiencies and cost cutting, which is key for a very convoluted and complex portfolio of brands like they have. Dividend is strong, which is very compelling in this low yield environment we're in. But, are there better opportunities out there? Yeah, I would argue there probably are.
Because, of course, this is a company with global operations, so they actually manufacture, like Cremora out in a plant in Potchefstroom, and in India they have a plant that manufactures, 2-minute noodles, and if they have problems there, then it's, a difficult beast to really rework on.
Correct.
Okay, so I've got a bit of a confession to make. I own some Nestle portfolio shares, not in the hot stocks portfolio, but in another account. Recently sold those on account of the sort of turgid growth history and took advantage of the higher share price to move into other more exciting positions. So I'm inclined to go not hot on this one.
I'm going to agree with you there. I mean, I think you know what you're getting in it, but there's probably better opportunity.
Okay, good.